Hey guys, it's Wolf Lopez here, back with another video. Very excited for this video. Welcome guys. This is going to be a video about Chainlink, and I'm definitely very bullish on Chainlink. Chainlink is just amazing. I highly recommend you to do your own research on Chainlink. Go read everything you can find about it, because it's definitely something that you need to do your research on. But anyway, I'm not going to go more in depth on what Chainlink is and what it does. I'm just going to, because I assume that you already know it, because if you're watching the news here. So we're going to check out Chainlink news for today. Also guys, I want to quickly update that I created a new channel, White Rock Cryptocurrency Educational Hub. So basically I'm going to create a lot of tutorials here on how to stake cryptocurrencies, how to buy, sell, trade, all kinds of like beginner tutorials and more advanced also. So definitely go subscribe. And I also started as a documenting journey. This is for me that I also started a new portfolio, building a new portfolio for White Rock Crypto, and you can get access to this to my portfolio. You can see it every day in real time. You can find the link in description if you want. This is not investment advice. I just want to create this because it's 100% entertainment, of course. So you can check out what I'm doing for this long-term portfolio here. Okay, and by the way guys, here it says that I spotted link at 20 cents. I definitely spotted link at 20 cents, but at the time I was very beginner, okay, because in late 2016 I first started in cryptocurrencies, and I didn't do my research back then, and you know, I totally missed out buying on the 20 cents, but that's okay, because I think that the price is still very undervalued. Okay, so like Charlie Munger and Warren Buffett says, it's not about the price, it's about when you buy, will it go up. It's all percentual gains. Okay, I think that it's very important to understand that. And you know, having a regret about not buying low is not what's that going to do for you, how that's going to benefit you. Okay, so in the end, resentment and overspending income is one of the things that Charlie Munger says that brings a lot of unhappiness. So I try to not be envious or have resentment for anybody, and I also try to not to overspend my income, obviously. So yeah, with that being said, I just want to say that because I think that's smart. But I thought Chainlink just did price feeds on Ethereum. Price feeds, proof of reserve, boom, 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 boom. I'm going to read it all, but you can see any blockchain, any API, you just win. It's just bad protocol is a joke. Read this thread and article linked with it. Regard to support every possible data opening, it's limited to free open APIs by design. Chainlink is a framework for building oracles where every node can specialize in the connections they provide contracts. Chainlink is just amazing, and definitely follow Chainlink. I don't know if I follow him on this account. Yeah, I follow, but he's very smart, dude. In general, Chainlink community, I think that Chainlink community in the community sense is one of the smartest communities other, because they really understand what's the product. Okay, and yeah, I think that it's very, very cool. So buy link, no, or remain poor. You have a choice. Leaving soon. Man, but also there's very hypey, over hypey people. Of course, that's going to be the case also. H bar be better. Dabs. TNX. Boom, boom, boom. Hello future. H bar. Which I do like this graphic. Chainlink isn't good one to use as comparison, given they are working with header graphs in the same way they are helping traditional blockchains. H bar. Together, moving beyond blockchains brought real-time data feeds to header-based smart contracts. Crazy stuff. Yeah, definitely. Bullish on Chainlink, even if BTC trend down, Link tend to perform better against Bitcoin. And boom, boom, boom. Solid entry point, to buy more stinkies, stinky linky. Yeah, definitely got that deep, guys. Definitely got that deep. And everyone will sell BTC to buy Cardano, Polkadot, and Chainlink. The Fed is trapped. Let's dive in deeper. Chainlink, this is the way out. The year is just getting started, and US financial deficits already reached another record. Now it's worse in level than 70 years. The current financial reserve here, boom, look, crazy stuff. Okay. In March 2020, lawmakers passed CARES Act bill, the national stimulus in December, with a decline in tax revenues and other laws. The government had issued new debt to fund these programs. To fund this operation, the Fed purchased treasuries of acquiring average 2021 in stick with it would be less than that. Last year, the math does not happen. Fiscal spending is likely to be significantly higher. The finance minister is now planning on a two-stage stimulus package: risk and recovery. The risk will be closed. That needs to be passed in coming weeks before unemployment benefit programs are exhausted of money. The recovery part has 3 trillion. That puts by the risk and recovery package at boom. Again, it compares with. In other words, a tsunami of treasury interest is likely underway. There is, however, another important contradiction. Not only fiscal pending in rolling away in January, your survey but your basis. Who is going to fund all this debt? Foreign investors? They only bought 5% of all treasuries issued in 2020. US banks, sure, they bought 70% of last issue. They are loaded with treasuries already. In fact, banks now lend more to government than to businesses and households by a record amount. The ball is clearly on the Fed's court, but it's also facing its first predicament yet. It must suppress interest rates to allow the government to run extreme fiscal deficits, continue to prop up equity and bond market at record boom, boom, boom. In other words, the Fed will have no choice but to substantially increase its planned quantitative easing. After all, the central bank is the leader of last resort, but US taxpayers will also be on the hook. Throughout history, an increase in income taxes tends to follow a period of large amounts of government spending. It is only a matter of time until this becomes an even more discussed topic. So far, today's narrative is all about how big the fiscal stimulus is going to be. US highest marginal tax bracket, public debt to GDP. If nominal interest rates continue to rise and trading government policymakers will have redirected their focus. Nonetheless, tax increases are inevitable and indeed negative for risk assets. Tax increases are inevitable and this is indeed negative for risk assets. Yes, the equity market did not have significant issues when tax rates were trending up, however, stocks nearing record multiple across almost all fundamental factors. We think risk assets can be undergo such a tiny impact in the economy at today's price levels. Early peak, prior to a great recession. Look at your boom. Recession, Nifty bubble, tech bubble. Boom, boom, boom. Bubble. Back to the Fed. However, we think that no choice but increase in such environment. Investor will seek hard assets for protection. His community boom is contributing to macro influence. After years of underinvestment in basic realm of the old economy, the world is facing commodity supply shortages. Lumber and plywood prices are not only near record levels, but they are also rising at the fastest pace since base metals, gasoline are up over. Not to mention the rising industry demand of fiscal stimulus-driven economy attempting to both recover from COVID and transition to be a clearer, greener economy. Similar to the issues we had in Spanish flu, inflation keep building. Back then, consumer goods price began to rise due to the raw material shortage problem. Community producers were running well below their historical capacity, resulting in sharp up moves in price. This time, on the other hand, the pandemic already started after several long years of underinvestment in the commodities market. To highlight, investment in mining exploration are at 62-year-old low. Okay, So we strongly believe that there will be a minor supply-demand imbalance in the next years as part of current macro environments. More importantly, when adjustments for inflation, commodities are just likely about the worst level of great recessions, we are likely entering super cycle period. Great recession, super cycle. Commodities are your highway from the old to the new economy. When their prices go up, the whole investing landscape is set to change. Commodities, Bloomberg Commodity Index. Boom. Don't forget, we also just saw the largest wealth transfer from the government to the people in the last 30 years. But lower classes lost 84% of their net worth during the Great Recession. This time we saw the large annual income in wealth in the middle of the depression-like economic downturn. Okay, boom. In aggregate, U.S. household net worth increased by boom since the Great Recession began. Government can't afford this money party to stop. This is not like the disinflationary times we had after global finance crisis. It's quite the opposite. Today we have inflationary pressures on both the demand and supply side of the economy. Bull market for metals is coming soon. Increased demand, inflation, dollar devaluation, supply changes, pressing cost of mining due to higher energy costs. Will create bull market for metals soon. Very interesting. I had to read that whole because I couldn't stop. It was very interesting to see. But anyway, that's going to be the video. Thank you so much for watching. If you watched this whole reading that, I think that it's very interesting and it's very important. So that's why I just read it. Thank you so much for watching and tuning in for today. Tomorrow's video. Thank you so much for tuning in today. Remember to subscribe so you don't miss anything. Also check out my new free newsletter and like this video. Thank you so much. See you soon, guys.